Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FORTIOR interim report. FORTIOR technology provides a wide range of businesses and services, including research and development of motor driver control, IC chips design, and production of various chip series, plus three-phase ASIC series, plus single-phase ASIC series, plus driver IC series, plus MOSFET series, plus MCU series, plus IPM series supplying chips to various industries such as plus industrial equipment, plus motion control, plus automobiles, plus power tools, plus medical devices, plus home appliances, plus consumer electronics, plus AI and robotics, plus IT and communications. These services are offered globally, with a presence in Asia, North America, and Europe. The significant increase in FORTIOR Technologies' stock price over the past year can be attributed to several key factors. The company's successful listing on the Hong Kong Stock Exchange in July 2025, which raised $0.26 billion, marked a major milestone and contributed to its substantial stock price growth of 161% as of September 18, 2025. FORTIOR's strong financial performance, including a 32.8% revenue increase for the first half of 2025, has also boosted investor confidence. The company's strategic positioning in emerging technologies such as robotics and motor driver chips has further fueled optimism among investors. The successful collaboration with Sanhua Holding to establish a joint venture focused on cutting-edge research into hollow cup motors is another positive development that has contributed to FORTIOR's stock price surge. Overall, these factors have collectively driven the significant increase in FORTIOR's stock price over the past year. The primary drivers of revenue growth for our company can be summarized as follows. Our revenue has experienced significant growth due to several key factors. Firstly, our microcontroller unit, MCU, and application-specific integrated circuit ASIC products have seen substantial increases in demand from various sectors, including smart household appliances and automotive industries. The Intelligent Power Module, IPM, product line has also contributed significantly to our revenue growth, driven by the increasing sales of IPM products with motor control functions for white household appliances. Furthermore, our expansion into emerging markets such as mainland China has yielded impressive results, with MCU, ASIC, and IPM revenues experiencing notable increases. Additionally, our technological advancements in IC design, motor control algorithms, and motor design have enabled us to stay ahead of the competition. Strategic investments and acquisitions in overseas markets, coupled with the launch of new sensor products and expansion into new markets such as robotics, have also contributed to our revenue growth. Overall, these factors have collectively driven our revenue growth, positioning us for continued success in the industry. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes, as evident from the recent data. Notably, net income has declined by 4.1%, dropping from RMB 122,021 to RMB 116,511. This decrease is a cause for concern, indicating that the company's revenue growth may not be sufficient to offset its increasing expenses. On the other hand, operating income has seen a substantial increase of 32.7%. However, this improvement in operating efficiency has been somewhat offset by a decline in gross profit margins. The margin decreased from 52.6% to 51.9%, suggesting that the company's ability to maintain profitability is being eroded. The reasons behind these changes are not explicitly stated, but it can be inferred that the company may be facing increased competition or rising costs, which have impacted its bottom line. Despite the increase in operating income, the decline in gross profit margins indicates that the company needs to focus on improving its pricing power and reducing costs to maintain profitability. The company's financial performance indicates a significant improvement in its ability to generate cash. In 2025, the company produced $127,472 in operating cash flow, a notable increase from the $110,365 generated in 2024. This upward trend suggests that the company is becoming more efficient and effective in managing its operations, ultimately leading to increased profitability. The company's financial performance reveals a mixed picture across various segments and regions. On the positive side, smart small household appliances contributed significantly to sales, 53.9%, while white household appliances showed growth potential with a 20.9% sales contribution. Industrial applications also experienced rapid growth, accounting for 14.3% of total sales revenue. Automotive electronics saw significant growth as well, contributing 10.12% of operating revenue. In terms of regions, mainland China stood out, with revenue increasing from RMB 262,818 to RMB 345,722 in the first half of 2025. Conversely, other countries and regions struggled, with revenue declining from RMB 19,506 to RMB 29,318 during the same period. Management is optimistic about the company's future prospects, outlining ambitious short-term and long-term goals. In the short term, the company aims to expand into new markets, including overseas expansion, and consolidate its advantages in consumer applications through partnerships. In the long term, management envisions the company becoming a leading global supplier of motor control chips and control systems, staying at the forefront of industry with technological advancements, and seizing opportunities brought about by emerging industries. To achieve these goals, the company will invest strategically in research and development, product portfolio expansion, and overseas sales networks. Management also emphasizes the importance of talent development, aiming to attract top global talent through attractive incentives and an open corporate culture, while continuously improving R&D personnel training systems. The company's financial summary reveals that it has a history of rewarding its shareholders through two key methods. Firstly, the company has consistently paid dividends to its investors, as evident from multiple references in the provided pages. This indicates a commitment to sharing profits with stakeholders and demonstrates confidence in the company's financial performance. Secondly, the company has also engaged in share buybacks, which is another way of returning value to shareholders. By repurchasing shares, the company reduces the number of outstanding shares, thereby increasing earnings per share and potentially boosting stock price. This strategic move suggests that management is confident in the company's future prospects and is willing to invest in its own equity. Overall, these actions demonstrate a shareholder-friendly approach and a commitment to delivering value to investors. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights concerns regarding inventory buildup and supply chain disruption. The data reveals a significant increase in raw materials, finished goods, and outsourced processing materials by 49.6%, 39.7%, and 29.1% respectively from December 2024 to June 2025. Furthermore, the cost of inventories sold has increased by $46,517 in 2025 compared to 2024, indicating potential issues with inventory management. Additionally, a write-down of inventories to net realizable value is $250 higher in 2025 than in 2024, suggesting that some inventory may be obsolete or difficult to sell. The increase in selling and distribution expenses from $8,316 in 2024 to $17,012 in 2025 also raises concerns about the company's ability to manage its supply chain effectively. These factors collectively indicate potential issues with inventory buildup and supply chain disruption, which could have significant implications for the company's operations and profitability. That concludes the financial summary for FORTIOR. Feel free to comment below, and I will be happy to answer them when possible.